So good evening, ladies and gentlemen. Thank you for patience. We are going to start the session shortly. Manoj, can you go for a full screen? Manoj, am I audible?
Yes, Suraj, you're audible.
Can you go for a full screen?
Yeah.
So good evening, ladies and gentlemen. Today, again, as usual, we are going to start our monthly rollover report. We have with us Mr. Manoj Fialar. He's a VP derivative from Religare Research. So I would like to request Manoj to take us through this presentation. Manoj, over to you.
Yeah, thanks, Suraj, and a very warm welcome to everyone on the monthly rollover webinar that we have. So guys, in this, the webinar is usually divided into two parts, wherein we discuss first what is the indications that we have for this series of May, and followed with that, we boil down to 4 stocks that we feel can outperform the month of May. And then we have an index strategy that we recommend doing it for this month of May, and then we'll take the general questionnaire, which will to resolve any queries that would be specifically on this rollover analysis. So let me just take you through what happened in April series. So if you remember, from March to April, that is the last time we had this monthly rollover webinar, there was huge positions in the bank Nifty and better in the Nifty as well. So it was primarily short positions from the FII desk. So if I might say that FIIs were more on a cautious note since the last 3 months into this calendar year. We might say that from Jan, Feb, and March. And in the April series is when they had a huge short position as high as almost 91% in the index, which later on trimmed down. So now we are starting this May series with just around 60%. So on an average, the percentage doesn't matter. It usually the norms or the sentiment that follows is the same. What happens is generally on if you see 50 to 60%, that is a norm at which the FIs short the index, and when it goes to an beyond an 80%, that clearly says there is nervousness from their side. And once we see it dip below 50%, 50%, we might term is as a higher complacency or lesser caution is what they have. So that is exactly what we are seeing from April to May series. The FIs have not really rolled their short position, rather they have selected some long position. So the 90% shorts they had in April series got trimmed to a 60% short in the May series, and obviously the rest is the long positions that we have. Now, there is another indication of volatility. We all know that volatility index. So that simply says that if you see today 10.8 almost, that is maybe a year's low that we are seeing. Generally, the VIX would not really go below 11%, but then we saw it dip below a 10.5, 10.8%, which clearly says that, it might not be wrong to say that the complacency has set in with this extra wagon move that we have seen in the Nifty, almost 1,000 points, we might say, in the last 20 to 24 sessions. So the May series, if you see when we started this day, this presentation is taken data from what the expiry had, that is on Thursday. So when we started this day today, the May series for Nifty futures had 82 lakhs versus a 120 odd lakhs. So you can clearly see the difference of almost 38-40 lakhs. Those were primarily short positions and more from the FII desk. So we are not seeing much short position being rolled. So short covering is what has happened from April to May. and that is exactly why we are seeing lesser open interest. Now, there are two things we usually say in derivatives. Participation is one norm where we can understand where the market is, and second is the type of instrument. So if you see, at least on the future side, FIs have opted not to roll the short position, which clearly says that at least some options selling might set in, and that is exactly why the VIX has dipped to a 10.5. Now there are a couple of days off in this week as well. So, but we look into the weekly and the monthly option. 17,000, we come to the next slide on that, but on a general basis we see 17,500 and maybe an 18,200. This 700 odd points is where we are more or less seeing the accumulation. So first, Nifty started on a lower note, though that says that there is less pessimism, if I might say that, and the long position that we have into the May series for the Nifty future, weighted average price of somewhere close to 17,700 to 750. So what we mean by that is this entire positioning, roughly around 88 lakhs of Nifty futures that we have, the weighted average is somewhere close to 17,750. So how does it help? Till the time the Nifty does not really dip below that, the M2M would not really be negative if we assume that this major portion is a long positioning in the index. So we take that as a pivot. So Nifty has a strong support, or the support for the Nifty for the coming week and this month of May series first primarily would be 17,700 to 17,750. So taking that as an advantage, we have seen good amount of put writing into the index at those strikes as well. So we compared the same on the option side. If you can see, this is the option side wherein we see 17,500 put. Now, obviously, 17,700 and 800 also has good enough positioning in terms of open interest, but 17,500 proclaims more, and we have seen good amount of put base at that. So for the series, it would not be wrong to say that, at 17,500, because of the put writing base that we have, and 17,700, which is the base of the Nifty futures existing into the May series, this zone, this 200 points would be the major support for the series for this month. And obviously on the upside, now we believe that 18,200 plus or minus 100 points might be the resistance, because if you see, there is huge call writing at 18,000, but net the premium comes to around 120 odd rupees. So we believe 18,100 to 18,200 might be the resistance. April series, the Nifty rallied almost 4.4%, and the Bank Nifty outperformed. It was almost 7.5%. So good 3% outperformance is what we have seen. Now we run into a ratio analysis which simply tries to help us understand if the Bank Nifty might do the same for this month. So I'm afraid that we might not really see an outperformance. That doesn't mean that we are negative on the banking stocks or the Bank Nifty. But we believe because the Nifty has a single highest weightage into the sector for banks and finances closer to 30-34%, this index or these stocks might be in tandem to the Nifty. So if we expect the Nifty to be up 2%, we are expecting the Bank Nifty also to be up by 2%. So we do not really expect something beyond the movement of Nifty for the banks into this series of May. Now, even on Bank Nifty, if you remember, last time we mentioned that it was last year, April, that when the HDFC news came in, we had seen such huge positioning of 35 odd lakhs. So this time, even from April to May, because of the short covering, we have seen just lesser positioning, which is 22. But if you skip the last month, 22 to 24 lakhs, more or less, that's the average with which the Bank Nifty starts. So it would be wrong to say that we are seeing less position, but generally on an average 22 to 24 lakhs for the Bank Nifty and closer to 90 lakhs for the Nifty. That is the average at which we see the positioning start. We club this with the option data as well, wherein we see that 43,000 strike call option that has got the highest open interest. Now, there is we are clear about that for Bank Nifty, it is the strikes which are 500 points away has more liquidity than the strikes in between them. So again, 44,000 and 43,000 on the call base, we are seeing huge amount of call writing. So we expect that in the event there is further upside, these would be the resistances that the indices might face in the short term. Again, on the put base, if you see 43,000 has got the highest open interest. So if you remember last time also we mentioned, this is one important indication that we always see in derivatives. There are maybe 2 to 3 months in a year when we usually see the highest call and put base happening in one side. Now generally when that happens, we see good movement happening in that particular underlying. So at least on the basis of the put base and the call base of 43,000 strike, we believe that there is a possibility, like we said, that bank nifty might be just in terms with the nifty and we would not really see an outperformance. Now, so that's the view that we have for the May series. We believe Nifty has got more legs on the upside, but the potential seem, or the momentum seems to fade away closer to 18,200. And again, a 300 odd points correction would be a healthy level to go long. For the bank nifty, again, we believe it might be in tandem to the bank nifty, and we do not really expect an outperformance. So this is the broader view that we have. FIs have managed to buy 2,400 odd crores into the April series, so that is a positive note. So we have been seeing selling, but more or less at 2,400 odd crores, irrespective of what the market or the global scenario was, they managed to park in that much money into the Indian equities in April. Is a positive sentiment that we cannot really rule out. So we boil down to 4 stocks also. So before that, we'll just take you to the sectors that we have seen. Now, we all understand that IT has been underperforming, at least in the last 3 to 4 odd session, thanks to the global cues that get worried because of the sector. But one thing, especially stocks like Infosys, we have seen that post the result or the correction that happened post the result, we are not really seeing a major selling or shorting that has happened. And there is a possibility that this is one sector along with banks and oil and gas, which we believe is positive for this month of May. So IT, oil and gas, FMCG, and possible select banking stocks is what we believe would help the Nifty maintain this positive momentum. Even though if there is a dip to come in, this is where the next bout of money might come in. So just to look into the quantitative aspects, if you see rollovers on an average, the market-wide rollover means the entire stock futures which are there in the F&O basket segregated into different sectors. So that on an average has rolled around 94% versus 93%. So it is more or less in line. Usually the peak we see is around 98 to 97%. So with respect to the ratio at which the indices have grown, the market-wide rollover positioning is much better. So we believe that the breadth in the market, or it would be a broader rally rather than a concise rally specific to index at this point of time. So May month can be a stock-specific month wherein we can see good alpha or outperformance from a lot of stocks. And we believe these stocks might be from 4 major sectors, like we mentioned: IT, banking, select banking stocks, oil and gas, and FMCG. The next slide has 4 stocks wherein I'll be handing over this call to Gaurav, who will give you more views on these stocks that we believe might have performed for this month of May. Over to you, Gaurav.
Thank you, sir. Hello, everyone. So today we have come up with 4 stocks that we believe might outperform the index. In previous series, we saw a unidirectional move in both the indices. Just to be on a cautious note, these 4 stocks that we believe are safer bets to go long in at this point of time. So without wasting, first is Bharti Airtel. So the stock gained nearly 6% with a rise of 15% open interest in previous series, and that implies long formation in the stock. The longs are being rolled at a good 94% in last 3 days of rollover activity. We believe Bharti Airtel is poised to do well in the May series, and we expect it to trade in the range of 754 to 845. So 754 is basically the stop loss that we had in the stock for our bullish view, and 850 is something that we eyeing for in the stock. Second, we have Exide Industries. We have been seeing automobile sector doing well in last series. Stock specific action was seen in the previous series. So Exide Industries that we have for as a pick, the stock fared well in April series by gaining almost 10% with meaningful rise in open interest. With rollovers at 96%, we believe holding 181 levels, stock is placed well to inch toward 205, 2010 levels. So first was Bharti Airtel and second was Exide Industries. Next we have Berger Paint. We have been talking about the paint industry. Yes, crude is going down. So the beneficiary of crude going down would be Asian Paints and Berger Paints. So Berger Paints would be the would be our third pick for the May series. The stock gained nearly 5% and meaningful long seen in this way as well. The stock, after bouncing off from its support at 580 to 85 levels, and did well in last 3 days of April series. We believe the stock has the potential to test 630 to 640 levels in the near term and advocate to have a positive view on the stock. So Berger Paint would be the positive. We have the positive view on the stock. And last we have ONGC. The stock gained nearly 7% with addition of huge open interest. After taking supported, the stock has been consolidating in the range that is 150 to 160. The stock has done well before expiry by successfully consolidating above the upper range, that is near the 160 mark. So we anticipate the stock to march towards 169 to 170 levels in the near term. So yes, these were the 4 stocks that we believe has the potential to beat the benchmark. So let me sum it up in Hindi as well. So मार्केट में जैसा सर ने बात करी कि अभी भी स्टांस पॉजिटिव रखना चाहिए, बट एक यूनिडायरेक्शनल रैली के बाद यहाँ से हमें सेफ बेट्स पे देखना चाहिए. यस, बैंकिंग सर ने जैसा बोला कि परफॉर्म करेगा, लेकिन वो टैंडम में ही रहेगा. कुछ एक्स्ट्रा आउट परफॉर्मेंस की एक्सपेक्टेशन बहुत ज्यादा नहीं कर सकते. सो वो ध्यान में रखते हुए भारतीय एयरटेल, सेकंड एक्साइड इंडस्ट्रीज, थर्ड बर्जर पेंट एंड फोर्थ ओएनजीसी, जहां पर ऐसा हमारा मानना है कि आप पॉजिटिव व्यू रख सकते हैं और ये बेंचमार्क के रिटर्न्स को बीट करेगा. सो दैट वाज ऑल फ्रॉम माय साइड. हैंडिंग द कॉल बैक टू मनोज सर.
Yeah, thanks, Gaurav. So just to sum it up, like you mentioned that, this would be a broader rally than a sector specific. So the 4 sectors that we again mentioned: IT, banking, select, oil and gas, and FMCG. So we believe that Berger Paints from FMCG would be one stock. Now we look into the delivery based buying also. So clients who are or participants, please note that these are stocks that you can recommend your clients even on the cash market level. So we advocate more delivery based buying on this stock, because if you see, let me give you an example. Your Berger Paint is trading somewhere close to 598 to 600, and the base of the buying or the delivery base or the long positioning we see has happened from 585 levels. Now it has got good potential, a good 42 rupees on the upside. So a better strategy would be to give a cash based buying recommendation to the client, wherein he can take delivery on this stock. He can wait for the May series, and the target of 640 is where he can square it off. Now if you have clients who are very stock specific and say we need to trade only in stock futures, so in all the stocks, if you see, we have mentioned the support level. Now that support level is nothing but the positioning which has happened for this new series of May. So if you get Berger Paints closer to 580 to 585 and the client is specifically trading into stock futures, that these are the levels to go long. Obviously the stop loss would be somewhere close to 20 points on the downside, and the target would remain the same, 630. Similarly for ONGC, like Gaurav mentioned, it was consolidating throughout and then it is actually given a breakout. So if you just couple of months before, I guess 132 to 134, these were the levels where the buying started, and it has a potential to almost go towards 170. Now that would happen in the coming months, but for this month that we have seen is 154 to 156 is a good level where this cash based buying and long positioning has happened. So stock specific, if the client is going for a stock future, ONGC 154 would be a level. Else Tuesday, the first thing you can do is you can ask the client to buy a cash based buying, which is your delivery buying, and the target can be 169 on the stock. So this would be the 4 stocks that we believe can outperform. Now, guys, obviously, the major weightage in the entire market comes to the index option trade. So what is the strategy that we need or we suggest doing, and what is the rationale behind that? So we all understand that any index option, precisely on Nifty and Bank Nifty, caters to a lot of analysis, basically the time to expiry, the expectation of movement, and the implied volatility that an option has. So what we believe is, as I was mentioning, the VIX is low at 10.8. So just to give you a simple analysis, let's say if you have the VIX at 14, and if you have a VIX at 10, So obviously it's a 40% odd, but the difference in the premium would be a good 14 to 16 odd rupees. So 116 118 rupees premium or 120 rupees call or a put option when the VIX is at 14 actually comes down to 98 to 100 if the VIX is at 11%. So we tend to lose a lot because the implied volatility is less. So in short, implied volatility is nothing but the expectation that the option would have in the next 30 days or till the time the expiry is there, and that is because of the movement in the underlying. So what if you see the Nifty view that we have is Nifty has positive has got more positivity, but then we believe that a dip towards 17,700 to 800, that is where the momentum would gain in, and we might see a directional 400 odd points movement. So the better thing to do is we recommend selling a 17,900 call option for the month end, which is your 25th May. Club it with a 17,900 put option. When you sell this call and put option, the combination, you get a premium of somewhere close to 400, 410 odd. And then you hedge this position because option selling is a riskier strategy. To hedge this position, you buy the 18,400 strike call option that is costing around 40, 45 rupees. Also a 17,400 put option at 40 rupees. So if you see, you net buy two options, 45 and 40 rupees. So that is almost 85 rupees. And you're selling 17,900 call and put option for the month and closer to 410 to 430 rupees. So the difference between these two buying and selling comes to around 330 rupees. There should be a stop loss because it's a strategy and it's an option as a trade. So the stop loss comes to around 420 and we're expecting 150 rupees on that. Now, let me just put some ideas here. See, if you see the strategy itself is at 330 and we're expecting 150 rupees. So if you see the May series, so what we expect is major part of the time, at least till the first fortnight of the May series, we do not really expect the index to hover beyond a 350 to 300 points from today's close. So 18,300 maybe and 17,700. That is the broader view this strategy portrays. So whenever you see a strategy, the basis behind that is the net premium which is being sold is more or less the broader level at which we expect the index to trade. So just to sum it up, April was a positive series followed by short covering in both the Nifty and Bank Nifty. The Nifty rallied 4.5%, Bank Nifty outperformed at 7.5%. The cautious shorting from the FIs which were there till the April series of almost 90% has been trimmed to a 60%, and the volatility index or the fear gauge has come down to 10.5%. So we expect lesser swing or volatility, and there is a possibility the market would be in a range bound mode or a consolidation mode. Sector specific, we believe that it might be IT, select banking stocks, FMCG, and oil and gas, which can outperform this month of May series. The stocks that we like is Bharti Airtel, Exide, Berger Paints, and ONGC, which we recommend to give cash-based buying also to bring up the delivery. Or specifically the levels at which we have mentioned the support, that is a level where the stock future should be bought, obviously with the stop loss and the target as mentioned. For the index, we believe that 300 odd points or 330 odd points would be the swing for the next 15 days or a fortnight we are expecting on the index. So we recommend selling at the money call and put option and to hedge it by buying out of the money call and put option like we mentioned. The net strategy premium is around 330. The target we're expecting is 150 rupees. This has to have a stop loss of around 420 rupees. So I guess that sums up the basic view that we have and the understanding for the Nifty and Bank Nifty. So Suraj, kindly let me know if there are any queries regarding to this so we can take it ahead. Yeah, so we'll wait for 2 to 3 minutes, and then if there are any queries, you can ask in the chat box. So we'll take it one by one pertaining to this rollover series and the stock and the sector view that we have for the month of May. So we'll wait for a few more minutes. So guys, if there are any queries, please use the chat box and type in your queries. We'll be more than glad to answer those. अच्छा ये अपने को बोल रही है. Okay, guys, I guess we do not see any questions, so we'll just take some generic understanding that we have. So first and foremost thing is a simple way to look into what the market expectation would be on the day of expiry, or when we start a new contract on Friday morning, the first 30 minutes, what you need to simply do is whatever level the market is, let's say the market opened at 18,000. So just go to the month end option of 18,000 call and month end option of 18,000 put. And all you need to do is you need to add it up. So let's take an example that a call option was 250 rupees and the put option is also the same price. So roughly you see that the net premium that you have at the money strike is 500 odd rupees. So on an average, if you're doing this month on month, so you roughly get an idea that this net premium that you get goes from 420, 440 odd rupees to also a good 580, 560 rupees. So a simple understanding is both the call as well as put has got the same premium. So it is not usually that you see a 280 rupees on the call and maybe a 200 rupees on the put option. This is for at the money. So a simple 500 rupees, and if you see the number of days to expiry, so if you see number of days to expiry, there are closer to, let's say, 20, 25 days. So 500 net premium divided by 25, you simply do that. So you understand that it would be 20 per day roughly on a basis at which the rate, this is the rate at which the option premiums might come in. The reason why I'm mentioning this is there are a lot of clients who get into option selling. So there has to be logic behind that. So if you're selling a 500 rupees call and put option and you expect a 300 odd rupees, so we need to understand that it will minimum take you at least a 15 to 18 odd days to get into that 300 odd rupees. And unfortunately, that doesn't happen linearly. What happens is, let's assume that there are 4 weeks in a month. The first week, you would not really get more than a 30 to 40 rupees decay, or the value would come down. So this 500 total would go to a 460 odd. The next week it would be around 380 to 400. It would be the third and fourth week where this 380, 400 odd rupees, it comes down to a drastic 200 or a 180 rupees. So to simply say, the selling or the option price falls when it is approaching expiry. So a simple way to do that, where the risk and the reward can be favorable, is whatever is the number of days to expiry, you divide it by 2. So in this example, let's say we have 25 days to expiry. So if you divide by 2, roughly 12 or 13 would be the answer. So the first 13 days of the month, if you are selling a call and put option of 500 odd rupees, you can expect 20 to 30% you would get is towards the 12 rupees. So this can be a rough understanding whenever a client or a trader would want to sell an option. Now, this is provided, as I mentioned, if the VIX is at 14, which becomes a basic average, and the VIX is at 10, almost 18 to 20% premium difference is there. So if I say that in this series, when we started, let's say the 17,900 call option was 260 and the 17,900 put option was also 150. So it was almost 410 to 420 odd rupees that we are seeing this net premium. If the VIX was at a good 14%, 14 or a 16%, this 410 total would have been around 480 to 490 odd rupees. So you can see that the difference of that 50 to 60 odd rupees that comes is because of volatility index. So it is prudent, or it is much profitable to sell options when the volatility index or the VIX or the IVs are at least north of 14%, that is 14 and 15% and above. And it is more prudent to buy just plain call option when the VIX is at so-called levels of 10. So this would be the basic understanding that everyone should have. Second, if you see the sector specific that we mentioned, so I'll just segregate one part. Bank Nifty and the banking stocks has a mix of private and PSU banks. So we have seen April month wherein the private sector banks has rallied and helped the Nifty inch. There is a possibility that this time it would be the PSU led by SBI and stock specific. There are a number of stocks in PSU which are more in there, but stocks like SBI which can help the Bank Nifty. But overall, we do not really expect the Bank Nifty to outperform heavily on the Nifty, and that is exactly why we are looking into other sectors like the telecom and Bharti Airtel, and auto and Exide, and as I said, FMCG would be Berger and ONGC. So this would be the basic crux that we have. Let me see if there are any other queries that we can answer. The question is view on ICICI Bank. So stock specific. So guys, like we mentioned, there are close to 180, 200 odd stocks in FNO. So we would not really be taking stock specific, but because that we have seen good traction, we expect ICICI to do good. And basically the target on ICICI has a potential of almost 945 to 950. So we are expecting that as a target. So kindly given more generic or index specific queries more than stock specific. Thank you. So we'll wait for 2-3 more minutes if there are any queries to answer. So guys, if there are any queries, we'll wait for 2 more minutes. If there are any queries, please put it in a chat box. So I guess with this, we can conclude this con call. If there are any queries, please send us a mail as to equity. Yeah, stock specific again, as I said, please send us a mail on equityresearch@elegate.com and we'll be more than happy. So this would be the generic view that we have for the month of May series. Thank you everyone for participating and have a great weekend.